China reported a 9.5% year-on-year jump in its August exports, the third consecutive month to see an increase over last year's numbers. Now, despite the COVID-19 pandemic and global trade tensions, the figures mirror other positive signals coming from China's economy after the worst economic performance in 3 decades in the first quarter. At the same time, China reported a 2% decrease in imports compared to the same year period last year. So what factors are shaping these trends? And what do these figures say about China's overall economic picture? And why do they matter for global economic growth post-coronavirus? Well, joining us to discuss these are, again, Mr. Josef Mahoney from East China Normal University, currently in Washington, D.C., is joining us on the phone, and Mr. Jimmy Zhu, Chief Strategist at Fullerton Research, currently in Shanghai, and also in Beijing with me, Mr. John Gong, Professor of Economics at the University of International Business and Economics. Great to see you all. So let me first start with Professor Gong this time. Now, China's exports have increased year-on-year for 3 months in a row now, despite COVID-19 still raging in many countries and tensions still escalating between China and some of its trading partners, such as the United States and India. What accounts for these consecutive jumps 3 months in a row?
Well, I think the first 2 months are very modest increase, but I think last month's figure is really breathtaking. I think, in this environment where we have a close to a double-digit increase in exports is really something to be proud of. I think it probably testifies to the recovery of many parts of the world. I think particularly in Europe. The previous 2 months exports are not so much associated with these areas, but I think finally the developing part of the developed world is finally recovering. It appears that China is able to push its exports. I think there's a pent-up demand for a long time, for the bulk of the first half of the year for Chinese exports. We haven't really seen big numbers for the first half of the year, and finally the demand for Chinese exports are catching up now.
And Jimmy, let me also get your thoughts on what's been said here. I mean, also, what part of the overall picture of the China's economy do these export statistics show us? How important are exports to China's economic growth compared to domestic consumption?
I think the exports data is mainly reflect the global condition now. What we see after the pandemic, lots of countries, the major trading partners are starting to recover from the late second quarter. This is also reflected in the stocks prices. But one thing to notice that if we look at the month-on-month data, actually the exports actually is a decrease. So that gives us the message that the recovery of the world in the second half is still very bumpy at this moment. For the domestic consumption, I think at this moment, compared to lots of other countries, we have a quite a faster recovery. But that also depends on the global situation, because there's a lot of business which also linked to the overseas side.
Yeah. Now, here are some numbers I want to show our viewers. We also know that China's GDP grew by 3.2% in the second quarter from a year earlier. That's reversing a 6.8% decline in the first quarter, the first contraction since at least 1992 when official quarterly GDP records started. And also in May, China announced it would not set an economic growth target for 2020 as it normally does, as it dealt with the fallout from the coronavirus pandemic, of course. Now, Professor Mahoney, let me also bring you into the discussion. Now we are in September, and the picture is looking quite different from the first part of the year. I mean, what do these jumps say to you about the resilience of the Chinese economy?
I think it shows that it's resilient in a number of ways, and that good governance has really allowed containment and support policies, adequate support policy, to come into play and to get things restarted. And as others have said, it has to do with surging demand compared to earlier in the year. But I think one of the things is that it's also in a way, and I don't mean this in a normative sense, but fortunate timing. And so much as, China has been export-driven for some time, and it's been trying to transition more towards domestic consumption. Domestic consumption is soft right now, in part because the People's Bank of China is more concerned about maintaining financial risk and not pumping too much liquidity into the market. But what we see is that China was midway into this transition economically, And this is hit, and they have this capacity to meet global demand for PPE, for home and work study products as people are adjusting to COVID.
Yeah, so as Professor Mahoney mentioned, Mr. Gong, some analysts, they are also saying this. Part of the jump in exports is maybe due to China exporting more PPE, face masks, gloves, medical supplies, as other countries are still battling their COVID-19 outbreaks, and also items like laptops due to more people working from home. So are these year-on-year jumps sustainable, or are the GDP growth sustainable?
I would argue that the fact that we hadn't seen a exports dramatic decline in June, July, May time is probably attributed to the fact that China was exporting a lot of PPE and other medical supplies that are critical for fighting the coronavirus. But at this point, getting to the August timeframe, I would argue that that part is probably finished, because many countries, especially I think the United States and the European countries, have developed their own capacity to manufacture these products. I would say that at least the August exports increase, dramatic August exports increase, got to be associated with some other products that have been in demand for quite some time, but people were not able to buy due to the coronavirus. But now finally this demand is coming back. So I think from that perspective, I would argue that a big chunk of the increase in August could be sustainable, because this is really the demand for Chinese products that's not so much related to fighting the coronavirus.
So that's the export. Let's also take a look at the imports. Now, China is importing less than the same period last year. Jimmy, in August, imports fell 2.1% year-on-year, and in July, imports declined 1.4% from the same period last year. What factors are behind the drop, and is this a concern for China, especially given that China has consistently committed to further opening up and boosting imports?
Actually, I'm not very concerned about the 1 month data, because it's also from the high base effect from last year. But I think that there's one growth engine this year is very different. If we look at the listing company mid-year report, actually lots of technology companies, and especially from the small, medium size of the company, the other one actually much outperformed compared to those kind of traditional companies in the manufacturing sectors. So I think the strategy for China is really focus on the domestic oriented, and also focus on lots of service and also the technology sectors. So I think probably that would be the growth engine for China, at least for the short term, before the war business return to normal.
Now, here's one question we want to find out. On one hand, China says it wants to further open up and boost imports. But on the other hand, especially in the wake of the pandemic and trade tensions, it also wants to stimulate domestic demands, be more self-sufficient, what's been called an internal economic cycle. So, Professor Gong, how is China reconciling these two competing principles? Are they mutually exclusive?
Well, I think we need to balance our trade. I mean, that's our overall objective. But I think the one country they were particularly concerned about balancing the trade is with the United States. So, overall, for example, in 2019, we do have a fairly large trade surplus in goods, $420 billion actually. That's a very significant number. But I think as long as we move in the direction of trying to balance trade with the United States, it's okay that we enjoy an overall trade surplus, because trading goods is not the only picture here. Now I think in the first half of the program we've been talking about service trade as well, and in that area China actually has a very large trade deficit, about $260 billion. So I think overall, as long as we maintain a relatively balanced picture, and particularly we balance our trade with the United States in the future, I'm not overly concerned. I think China's export sector as a percentage of GDP is actually getting smaller and smaller year after year. Right now it's less than 20%. My calculation is about 18%, a little over 18%. I would argue that this number is going to continue to decline, as we have seen in many other industrialized countries where they have mostly a domestically consumption-driven economy, and export sector is not a very large number here. So from that perspective, I don't think the two objectives are really in conflict. They can work together.
You talked about service trade as well. What I find interesting is that China is emphasizing its trade and services and would like to shift its economy away from being just the so-called factory of the world to a more sophisticated economy for services and et cetera. And yet we just witnessed China supply most of the world with equipment to fight the virus and adjust to this new normal. And these report numbers make it look as if exports will remain the foundation of China's economic growth. So Jimmy, is China having an identity crisis here?
I don't think so, because basically this pandemic is just so huge, and I think there's not many countries around the world that you can produce so many medical supplies in a very short period of time. And also China has been in a manufacturing base for for several decades already. So even now we are talking about the capital market reform, we are talking about the economy structure reform. It takes a very gradual pace of time. So for now, I think it's a very important thing is when the global economy is in a slowdown, I think China already did a pretty good job actually to balance the new economy and the old economy.
And I also want to talk about the trade war that's going on. Professor Mahoney, let me get your thoughts on this. I mean, China and the U.S. are still reportedly trying to push forward their trade deal, but according to recent U.S. Census Bureau data, the U.S. trade deficit with China was 9% wider in July 2020 than in May 2016, when U.S. President Donald Trump accused China of the, quote, greatest theft in history. So is evening out this trade deficit a dead-end dream?
Well, I think the first thing we have to say is that Trump's trade war has been an utter fiasco. It certainly hasn't benefited China, but it's hurt the United States even more. And I think just to deconstruct a couple of things, historically, Western imperial powers built their economies through appropriation, through taking resources from colonies and whatnot. And then if you look at what the U.S. did to German patents, the appropriation of German patents during and after World War II. And I think this tendency just to in Trump but others in the West to view China as a monolith, that China stole this, right, where you may have some bad actors in China, some bad companies, but you have that everywhere in the world. So I think part of the problem is that the U.S. limits what China can buy. If U.S. allowed China to buy the tech that it wanted to buy, a lot of the trade imbalance would even out. It wouldn't be perfect. China is still going to produce more. At the same time, you have, Trump wants to reshore American businesses, but that didn't work even before COVID. And during COVID, we haven't really been able to get back to work. And at the same time, we've been driving domestic consumption with easy money and with government support. So we have money to spend. I don't know how long we'll have it. And we're looking to buy products, and China can manufacture those. And as a result, we need them, we'll buy them, and the numbers are off.
And Professor Gong, let me give you a chance to respond to this. What do you think?
Well, I think the past few months is very special. It's a lot to do with the coronavirus. I don't think China is deliberately maintaining a widening trade deficit, a trade surplus with the United States. It's primarily driven by the oil industry, for example. It was in a big trouble in the United States. Oil price has plummeted to like $11 per barrel at one point, now recovering back to $40 per barrel. And there's also the issue of supply capacity. For some time, for example, the slaughterhouses in the United States were affected, and then they shut down. And so this is a temporary shock to the demand side as well as the supply side on the other side of the Pacific. So I wouldn't take this as interpret the numbers in the previous 2 months as something that is sort of intentionally created by the Chinese side. Absolutely not. It's because of a shock. The shock is called coronavirus, and then things are coming back. And I also want to point out that President Trump, for the record, have said that the Phase 1 trade deal is still in order here. He's actually pretty happy about it. China is still buying big things, from buying corn, buying other agricultural products, and buying oil. So I think moving forward, this phenomenon is just it's a temporary thing, and moving forward, I think trade will be more and more balanced from U.S. perspective.
Now, from a U.S. perspective, Professor Mahoney, how are the United States or other economies looking at Beijing's economy trajectory? I mean, what does China's economic recovery mean for the rest of the world as economies are still being battered by coronavirus, lockdowns, unemployment?
I think that you see this message, and you saw this from Xi Jinping at the import fair China is standing strong and will be a bulwark in the global economy, and that other people can draw some comfort from this. But I think actually the opposite is happening. I think you see a number of countries are kind of terrified about how China has gotten their act together and restarted their economy. And as a result, you see these comparative disadvantages in India with their economic problems and in the United States. And I think, there was already this concern of a rising China. And, as a result of this economic performance, it's further eroded confidence in these other countries and increased their fear.
Well, at least one country's GDP is contributing to global growth. I think China's recovery is good news for some of the countries. Thank you very much. Many thanks to Professor Josef Mahoney from East China Normal University, Mr. Jimmy Zhu, Chief Strategist of Fullerton Research, and Professor John Gong, Professor of Economics at the University of International Business and Economics.